Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1642A, and today's date is August 19th, 2018, and the title of the episode is, It's Coming, and it's going to hit the global economy like a tidal wave. Now, before I get started, I just want to make an announcement. I uploaded a new interview with Jeff Nielsen. It is on the X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It will bring you right to the interview, or you can come over to the x22report.com or newssentinel.com site. Scroll down a little bit, look over to your right-hand side. You'll see the interview there. You can play it right on the site, or go to Steemit, that's steemit.com/@x22report, and you can play the interview right on Steemit. Let's get into the economic collapse financial news. Now, we're going to see a lot change as we move forward here, because it does look like the Patriots are gaining control over the system. The deep state is in trouble. And we're starting to see that major changes are about to happen. And I'm not just talking about people going to prison and things like that. I'm talking economically, within the government, within everything that we've known, with regulations and everything like that. And you're going to hear many different things, a lot of different stories come out of the mainstream media, and they're going to say this is not right, this shouldn't be like this. And we need to understand what is going on here. As we move into a new economic system and everything starts to fall apart, the government will not be able to support what we once had. The money printing, the funny money, the creation of this currency out of thin air, well, that is not going to happen anymore. There's going to have to be checks and balances to make sure the economy is strong. The days of the central bank, they're going to be coming to an end. And this free credit card of just creating as much as you want out of thin air is also coming to an end. So what we're going to see is we're going to see the patriots within government, they're going to have to cut programs. And government's going to have to shrink. And a lot of people are not going to like this. And a lot of people are going to actually hate this. We're going to see a lot of the regulations, they're going to be dismantled. Because all these regulations that were built up over time, they didn't help the country. They didn't help the economy. I mean, if you're not going to follow the law, why create more laws and more regulations in the first place? You might as well follow the ones that you have. And just because you have more laws doesn't mean it's better, safer, more efficient. Actually, normally what that means, it's the opposite. And what we're seeing right now is Trump has suggested to cut down on the number of earnings reports public companies should present to the investing public from quarterly to semi-annually. And then people are out there saying, oh my God, this is ridiculous. How are we going to know what the companies are doing? Well, remember Enron, remember all the other companies. They were giving you fake, phony, and false information anyhow. Because those in these departments weren't doing their job at all. So the more regulations didn't help, did it? But the real reason why this is happening is because they found out that nobody is reading them. Accountant Baruch Lev asked, how many people read the financial reports? Guess what? Not much. In fact, not many at all. Well, take a guess. How many people read the 10K annual report? How many downloads does it get on average? Thousands? Tens of thousands? How about 28? That's it. There are more people working at the FASB, the accounting regulator, than financial report readers. And we see with the bigger companies, the large companies, the 10Ks, with many investors and analysts are downloading more frequently, of course, more than 28 times, but not much more. The 20% largest U.S. companies get, on average, 96.2 total 10K downloads during the filing day and the subsequent 4 days. So what we're seeing here is that not many people are even looking at this. So it's meaningless, and what it looks like to me is that these departments are going to be cut down. And we're going to see regulations change because we might as well follow the regulations that we have and the laws that we have instead of creating new ones that just ride on top of the same ones that we're not even following. And we need to cut down on government. Government is way too big. Too many people are employed. There's no reason for all of this. And why all this is happening is this is all being prepared for what is about to happen. And we talk about inflation. We talk about the economic conditions. We talk about what is happening in the real economy. And we see out in many different countries like Canada, the US, that things are changing. The Bank of Canada right now, they nudged up their target rate 4 times starting July a year ago, from 0.5% to 1.5%. It last hiked on July 11th, but now it is facing inflation that suddenly and unexpectedly jumped at twice the Bank of Canada's current target rate. It's very interesting. Now remember, the central bankers, governments, they've been manipulating these numbers to make you feel like there's no inflation whatsoever. But we know there's inflation. We can see it in food. We see it in colleges. I mean, they've just been stuffing it in all different places. Canada's Consumer Price Index, CPI, rose around 3% in July from a year earlier, the hottest since September of 2011. Statistics Canada reported on Friday that they expected about a 2.5% rise, the same as in June, but it went a little bit higher than that. Now, prices rose in all major components. Prices for services, the largest part of consumer spending, jumped around 3.2% year over year, up from 2.2% increase in June. In most of the provinces in Canada, CPI ran even hotter. Alberta's 3.5, Prince Edward Island 3.4, British Columbia 3.3, and so on and so forth. And it was much higher than they expected. Now, like the Fed and other central banks, the Bank of Canada had its preferred measures of inflation. And they're a lot lower, of course, which is the point. But unlike the Fed, it does not use core index without food and energy. Instead, it has 3 measures that have been statistically trimmed: CPI trim, CPI median, and CPI common. And this is how these 3 indices stack up in July. CPI trim is 2.1%, CPI median is 2%, CPI common is 1.9%. And what we're seeing here is that they manipulate these numbers to make you think that there's no inflation whatsoever. But we are seeing inflation, and it's going to be a big problem. And if you look at the mortgages in Canada, they also have different types of mortgages. They have the fixed rate mortgage. And of course, it sounds like everything is fixed, but that's not really what it is. It's not a fixed mortgage. The interest rate only stays fixed for a set period, such as 5 years. And then when that period is up, the rate adjusts to the current rate. So those people who got a fixed rate mortgage, it's not fixed forever. Adjustable rate mortgages. Well, the interest rate adjusts with the moves at the bank's current prime rate. An increase in rate causes the monthly payment to increase. Variable rate mortgages. The interest rate adjusts with the prime rate, but the monthly payments stay the same for the term of the mortgage, such as 5 years. During that time, the extra interest that is added to the payment replaces the principal portion of the payment. After the term, the mortgage is then renewed. The remaining principal is now higher than it would have been, and current rates apply. So with all 3 mortgage types in a rising interest rate environment, homeowners will sooner or later face higher mortgage payments. Now, we saw this before. We saw this back in 2007, going into 2008 here in the United States. We are now going to see this in Canada. Remember, the central banks have been manipulating the statistical information like inflation, and governments have been manipulating this, making us believe there is no inflation, and they've been stuffing it into the stock market, into health insurance, into the housing market, into education. It's been shoving it off seas, but eventually what happens, you can do this only for a period of time, and then everything starts to break down. And what we're seeing right now is the statistical numbers that they've been throwing at us. They're starting to break down big time. We're seeing it in housing. We're seeing it in retail. We're seeing it in how people spend their money. And now we're seeing it in inflation. We're seeing it here already in the United States. We're seeing it in Canada. We're going to be seeing it out in other countries. And what's very interesting about this, all these people that have been, getting these mortgage rates and things like that, they're going to be stuck once again. Those people who are in fixed incomes, they are going to have a tougher time. This inflation is going to come in like a tidal wave, and we're already seeing the beginning stages of this, and the economy is breaking down faster and faster. Forget about the statistical numbers. You can look at those all day long. You can look at the statistical numbers prior to 2008, 2009 when we had the Great Recession, and you can say, wow, the economy looks great, and all of a sudden, those numbers, they look great, but the economy failed. The same thing is going to happen once again. And this is why you need to be ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.